What's going on, boys? Welcome back to another video. November 10th, 2025. Day trading Nasdaq and S&P 500. Alright, then from this spot here, well, I was able to get almost 4% on my account today. It's actually super solid, 4%. I got 4% on my account. I got a $38 win. I could have had a higher win rate or higher return if I held my position a little longer, so I gotta start understanding if the bias does flip, then I gotta understand that it's gonna continue in the direction I want it to continue in. And that's after it draws and liquidity are swept, and then you see breaker structure and confluences in the direction you want it to go into. The 1 hour, 4 hour market opens was bullish. Off rip, market comes down into this 5-minute fair value gap, bullish fair value gap. And I honestly long off that. I don't wait for any type of sweep in liquidity. I seen there was a low time frame sweep on the 5-minute lows during pre-market. Market opens, I see it. That's when it dipped down and swept out that low resistance liquidity, but then it tapped into that 5-minute fair value gap. Once it tapped into that 5-minute fair value gap, I entered longs off that, targeting data highs, because we were already past Asian and London session highs. From there, I started to flip my bias to, okay, so then that's when the 10 a.m. candle was about to come into it, or sorry, like 9:40, 9:50 range. And right when macro opened, we honestly dumped so bad. I was able to pull out because I seen a 1-minute breaker structure happen and I was still in profit. So I pulled my position. I pulled out for like, I don't know, like a $1 or $2 win, which was nothing crazy. From there, I actually seen it break back to the upside to manipulate the 5-minute highs. And I entered again off a 1-minute break to the upside. I then got stopped out with like a $5 loss. I then seen, no, during 9:45 to like 10 a.m. that shit dumped. It was a blue candle up probably about 0.5%, and that it turned into a bearish candle, minus 0.5%, and from there, the next draw on liquidity would be London session low and Asian session low. Price came down, swept out Asian session low pretty quickly. It left London session low available and around 750. Around 750 we came down, swept out London session low. From there, 8 o'clock opens up, 8 a.m. candles opened, and it kind of just chops around till around, okay, it doesn't chop around, it comes up, it creates a 5-minute high, then it creates a lower high, it creates a lower low, it creates a lower high, then it creates a lower low. That's still above that liquidity that was swept out during London session low. So London session low was already a different 5-minute low. Then it created a higher low. Then it created a higher low before that, and then a higher high. During around 8:30, 8:35ish, the 8:30 candle happened. The market then came up, manipulated some 5-minute it broke 5-minute structure on one of the indexes. Other index it did not. And then I think we came down on a different index, manipulated those 5-minute lows. And then I was just looking for a 1-minute breaker structure out of that. Even though we were bearish, I was just looking for 1-minute breaker structure to the upside because we swept out so much liquidity to the downside that we have to retrace. So I went ahead and entered right there. Targeted just the 15-minute high, or that first initial 5-minute lower high was created. I targeted that. It then got smashed, and that was only like a 1-to-1, that was like a 1 to 1.5, like a $15 win. Then off of that, after we break structure in the 5-minute, we then come down, dip back into our power just went out in the house. From that, wow, that's weird. From that 1-minute breaker structure, then a 5-minute breaker structure happens, and by then I think I'm already out of that position because it already hit my take profit. From there, it dips back into a 5-minute fair value gap. Once it dips back into a 5-minute fair value gap, I say, okay, if I get a 1-minute bearish confluence out of this, aka 1-minute breaker structure, something along those lines, maybe an inverse fair value gap, I'll enter. I seen the 1-minute breaker structure to the upside, enter again off that, then that I didn't really have a take profit until I didn't have a take profit. I did, but that would have been at an hourly high, which was about 0.5% away. So I was thinking, we're not gonna hit this right now. It's already 8:30 or whatever. So then I targeted the bottom of a fair value gap, like the bottom of a 30-minute fair value gap, and it comes up, smashes that. I pull partials out. I pull half my position, and then I set the rest to break even. But to be honest, I then start seeing it. I didn't even see a 1-minute breaker structure, but I just seen it 1-minute bearish order flow for like, 2 candles. And I went ahead and closed my full position there. That was my mistake for the day. I should not have done that. I should have held till my other take profits, like the end of that fair value gap, or even the hourly high, which was above that, which would have been I think a 1 to 8 risk to reward ratio right there, which I think I risked about $10 on that one, or I might have risked $18, so that would have been I would have been fat, like a 16, I think that would be like an $80 win, which would have been fat, and I would have been up $100 on my account on the day, which would have been 10%. Which I'm not mad I did not do that, but I'm mad I didn't hold, because I set I did everything right. I hit my initial take profit. I then went to break even, but then I just got spooked, which I got spooked because that was the 50% point, because we also did break structure on the hourly to the downside off that big move down on the 10 a.m. close candle. Is that the 9 a.m. close candle? So it dumped on that candle. So from there, I was thinking we just want to at least retrace back up into about equilibrium range, and that's where I really took profit, because that was like the range to where I thought it would reverse off of the most. But I also seen that my take profit was at a 15-minute breaker structure to the upside, which at that point I should have seen that we were going to break structure to the upside, because we seen 5-minute bullish order flow for the past 30 minutes, and then on that, what was that? I think it was an 8:30 close candle it closed above that, which was a 15-minute breaker structure, and then it fucking took off from there. It moved at least 0.5% in. Man, it was a quick amount of time. It was 0.5% in before the next hour close. So yeah, about 30 minutes we hit that last take profit, which would have been a 1 to 8 risk to reward. Or if I held off my initial one, and then on that second one, it would have been a 1 to 6 risk to reward. So if I held on either long I took profit on today, then I would be up a lot heavier than I am right now. So I need to learn to hold bigger positions, hold longer when it's going towards my bias. And all the trades that I get invalidated usually get invalidated like that, which is good to see, just because you could flip your bias so fast that you're able to take a good trade again on the day. And me, I'm not the one trade type of person a day, just because I could sit on the market and slowly scope out like the bias that we're gonna want to go towards, but it's just figuring out how to mitigate losses and not risk too much. Alright, other than that, boys,